Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within financial filings. And let me tell you, this one has some spicy ingredients like a reverse stock split and investors paying with crypto. Today we're diving into a filing from Sharps Technology Inc. This report covers a lot of ground, from big money deals to personnel changes that could shake things up. It seems like they're making some pretty significant moves, entering into agreements to sell securities and getting new people on board, all while saying goodbye to some key executives. First off, Sharps Technology is looking to raise some serious cash. They've entered into agreements to sell securities, which is a fancy way of saying they're selling parts of the company to investors for cash, or interestingly, cryptocurrencies like SOL tokens. They're offering shares and warrants which give people the right to buy more shares later at a set price. The cash offering is selling common stock at $6.50 per share, or these pre-funded warrants for just under $6.50. And then there are these stapled warrants that can be exercised for shares at $9.75. Now for the crypto part, they're selling similar pre-funded warrants and stapled warrants, but the buyers are paying with SOL tokens, either locked or unlocked. This is a pretty big deal, moving into the digital asset space to fund their operations. And it shows a company trying to adapt to new financial landscapes. But here's a catch. The crypto warrants won't be usable for actual stock until the company's shareholders give the okay. To make sure these new securities can be resold by the investors who are buying them, the company has agreed to file a registration statement with the SEC. This means they're working to make it legal for anyone to buy or sell these shares and warrants that are being issued in these private deals. Something else that's a bit complex but important is an amendment to some existing warrants. Essentially, they're changing the exercise price of older warrants. The original price was a hefty $87.60, but now it's been reduced to $6.50. This is a massive drop, and it makes these older warrants much more attractive to current holders, potentially leading to more shares being issued into the market. The company is also issuing warrants to a strategic advisor, Sol Markets, for a nominal price of $0.0001. Sol Markets is controlled by James Jung, who also seems to be involved in managing the company's digital asset treasury, which is basically their crypto holdings. Now, onto some important leadership changes. Robert M. Hayes has resigned from his positions as Chief Executive Officer and a board member. He's set to receive a substantial payout of $1.2 million plus healthcare benefits for a year and a half, and he's also getting stock options for 100,000 shares. It seems like an amicable departure with no disputes mentioned. Also stepping down from the board is Brenda Baird Simpson. Her resignation, like Mr. Hayes, is not due to any disagreements with the company. But it's not all goodbyes. The company has appointed Yuen Alice Sang as their new Chief Investment Officer and a director. She's got a strong background in crypto, having co-founded a company that built the first Web3 phone with a decentralized app store and launched a large mobile network on Solana. Her salary is set at $600,000 a year, with potential bonuses and equity in the company. And there's more. Paul K. Dana, who has been serving as the executive chairman since June, is now officially stepping into the role of principal executive officer as well. He'll continue to earn $600,000 annually and is eligible for bonuses and stock options. Mr. Dana has a solid background in finance and executive leadership, including experience with Nasdaq-listed companies and a significant career in the US Navy. A really crucial update here is that the company has increased its authorized shares of common stock dramatically. They've gone from just over 1.6 million authorized shares to a whopping 500 million authorized shares. This is a massive increase, which obviously sets them up to issue a lot more stock in the future, possibly to fund their growth or through the warrants we talked about earlier. Looking at the shareholder meeting results, it's clear that the stockholders approved the increase in authorized shares. It's interesting to see that a block of Series B preferred stock, which will now be cancelled, carried a significant voting power, making up over 1 million votes for the share increase proposal. The shareholders also elected the directors, approved the appointment of their accounting firm, and ratified the 2025 equity incentive plan. The company also announced this offering via a press release, stating they expect around $400 million in gross proceeds before expenses. This money is earmarked for a Solana treasury strategy, a working capital, and general corporate purposes. They plan to keep these funds separate, which is a good sign of financial discipline. There's also a settlement in the works to resolve some ongoing litigation. The details aren't fully ironed out, but it involves transferring capital stock of a subsidiary. The outcome could materially affect the company's financial standing if their main offering doesn't go through. Now, for my take on Sharp's technology and this filing, they are clearly in a highly active growth phase, aggressively raising capital and making strategic hires. The move into digital assets and using crypto as payment is bold. It signals an awareness of emerging markets and a willingness to leverage them for funding. The massive increase in authorized shares is a necessary step for their plans, but also means potential dilution for existing shareholders down the line, especially as those warrants get exercised. The executive shuffle is significant. Losing a CEO and bringing in new leadership, particularly a chief investment officer with a strong crypto background, suggests a pivot or at least a strong emphasis on digital assets and smart investing in that space. The settlement of litigation is always a positive, removing uncertainty, but the reliance on the main offering's success for the settlement's terms adds a layer of risk. The company's direction seems to be set on expanding its financial and operational capacity through a blend of traditional and crypto-based funding. The opportunities are in tapping into new investor pools and potentially leveraging blockchain technology more deeply. However, the risks are substantial. The volatile nature of cryptocurrencies, regulatory uncertainty surrounding digital assets, and the execution risk of their new treasury strategy are all major hurdles. Plus, the dilution from warrants and a significantly larger authorized share count will be on investors' minds. Ultimately, Sharp's technology is making big moves. Whether these moves lead to sustained growth or become a cautionary tale will likely depend on their ability to navigate the complex crypto landscape and successfully integrate their new strategies. It's a high-risk, potentially high-reward situation. What do you all think about this company's dive into crypto? Are they pioneers or taking on too much risk? Let me know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord community, linked in the description for more discussions and to connect with fellow corporate analysts. Thanks for tuning in, and I'll see you in the next video.